Hello, welcome to Rabbit Chamani again.
Hello,
Hi Balaji, how you doing?
doing good. Thank you, Bharat.
Alrighty. So what are we talking today?
Well, we did made a video last time about how the markets are going to react to the escalating warfare, right?
Right.
So uh, let's see how it has panned out right now, and how is it going to go in the future. So
Okay, yeah,
what do
a
you
few
think?
things
What
have
has changed?
changed.
What do you
Yeah,
think? What has changed in the theater right now?
right. So I mean, in my opinion, right? So two, three things have happened. I mean, drone strikes, X, Y, and Z, these things keep happening, and we're not here to discuss the war or the politics, right? We're here to discuss the economics of it,
Right.
right? But I think one interesting piece of news is there are rumors that there could have been a nuclear test in Iran,
Yeah.
which happened disguised as an earthquake or something. I don't know whether
Right.
that's news, rumor, what is the
Right.
probability of it being true and what is not.
Right.
But everyone assumes that if it is true, it's bad news. But I would
Yes.
I would say mutually assured destruction is good news for peace.
Right. So
Yeah,
it acts like a mutual deterrent to each other, and then it might,
right.
lead to, yeah,
It might even lead to reduction in conventional violence, right?
that's true.
Which
Yeah.
which is what has happened all this time.
Right.
So
Well,
I would
yeah. So that's something that is very important in terms of the how things will pan out. But
and if you
more
look at
so from
oil,
the
right? If you look at Brent and WTI,
right.
I think that they're to some extent reflecting that.
That's true.
I
Yeah.
I mean it could even be noise, 70,
Right.
70, 76 to 74, 77 to 74, whatever.
Yeah.
However, what's important is even if the good news part of it is noise,
Hmm.
right? At least the crude market is not taking it as bad news, and that's
Right.
significant.
Yeah. If you
I
look
mean,
at
crude
if you
is
look
not at
at
100,
right. If you look at the volatility index of crude,
right?
CBOE, it's currently at 47 plus, right?
Right.
This this reflects elevated levels of expected volatility in the oil prices to some extent. Yeah.
But the price itself
So
isn't reflecting, uh, you know,
right,
anything bad.
that's true. But then again, there could be possible sanctions,
Possible. I mean,
because the escalations
there
have
there there could be sanctions, supply reduction, all of that.
right, right. So
Right.
and not
But
only
that's not nuclear warfare. I mean,
that's
that
true.
that
That's true.
that that bad news is a lot less bad. So
That's true. Yeah.
yeah.
Yeah, and also disruption in the distribution, the side, in the logistics side, because especially the routes, shipping routes,
Well, that has already
this might,
happened, by the way. That has
yeah, it
already
has, it
happened.
has. It's true.
And the logistics routes have actually been rerouted. And
Correct.
now Singapore is the busiest hub and they're not even able to handle the traffic.
Right. Of course. Yeah. Yeah. You would see all these things impact more in the emerging market and the US market. If you look at the US VIX, right, it's below 20. I think
Right.
it's not showing any signs of, you know,
Elevated
uh,
levels of fear.
yeah, yeah,
Yeah, it's not.
right. And then I mean, even gold to that extent, it's not like shown greater this thing, right? Increase.
Right. So again, because the world is not seeing that kind of an impact.
Yeah, yeah. If you look at the GVZ, it's sitting around 16 plus, right? So
Right.
that's relatively moderate, I think. While we do say that gold remains a safe FN, safe haven or asset, but it's not that much increased right now.
Right.
Yeah.
Okay. Yeah. So what else? What else has changed? So this has changed definitely. And
I mean, okay. So a very obvious thing, emerging market volatility index, right?
mhm.
Extreme. So that's hovering around 25 plus, right?
Okay.
That's the moderate concern about volatility in the emerging markets. So,
Well, I mean, see, if you look at it that way, right? Uh, all the markets are correlated, right?
yeah,
And if I do not see a big crash in emerging markets either, right? Because if that were to be the scenario, right, that should be initiated in developed markets,
right,
and that's not happening, right? So, I mean, emerging, like we discussed in our last video, emerging markets, bear a bigger brunt of crude and other shocks, if there are shocks,
mm,
right? Because of their capital controls and other uh, stuck in the past kind of policies.
right,
However, and again, that's temporary, right? I mean, crude did touch, 120-ish, 130-ish during the beginning of the Ukraine war. Did that sustain? No.
right, right.
That would have been a great level to short. So,
Yeah. What is the market belief now? I mean, uh, falling to safety. I don't see that. So I don't think so. There is a risk on yet. Sorry, risk off yet. So if you look at least in the US market, sure, for sure, because below 20 VIX, still risk on, I would say. So what are your thoughts?
yeah, I mean, it remains risk on.
Right.
Absolutely. I mean, are these attractive levels to buy? No.
Yeah.
But, is there fear in the market? No. I mean, there's a lot of fear in the traditional, in the political news media, and, among the so-called geopolitical experts, and, you know, a lot of these guys are peddling fear. But
Right.
that's not visible on the screen yet.
True. Absolutely. Agree with you.
And the markets may be right, may not be right. However, what I would say is, another old adage, and this is from John Maynard Keynes. This is buy when there is blood on the street. That's something we talked about.
Hmm.
This is another. The markets can be irrational for longer than you can be solvent.
Right. Right. No, absolutely. Yeah, true. So uh, let's go to the updates on our hedging strategies. Now, we did
Mhm.
discuss in our last video,
Right.
but do you still stick to the same thing, or do you think it's changed a bit?
Okay, so let's like we did last time. Let's do it by class of people,
Right.
right? Investors, professionals, and business people, right? So investors, nothing changes relative to last time. I mean, I wouldn't see any need to act, right? I mean, if you're thrilled by what the different stocks have done in the last 1 year or so, you can buy. However, I think that's also overreacted because I mean, markets extrapolate the recent past to the distant future,
Right.
and and
True.
and that hardly materializes, which is what gives rise to mispricing, right?
Right.
So the market has taken the last 1 year data of the revenues, the consumption data of defense equipment and stuff, and
Right.
extrapolated it for 20, 30, 50 years, right?
Yeah.
I don't think uh, that's gonna become a reality very easily.
Well, you're right. If you look at the defense sector, for example, U.S. defense sector, it's behaved like a new, you know, blood money.
Right. And blood money never sustains, right? I mean, uh, it's not good business. It can be
That's
good
correct.
business. It can be good business in the short term,
Right.
but killing cannot be compatible with
No,
capitalism in the
absolutely.
long term.
Absolutely. I agree with you. That's why I labeled it as blood money. If you look at it, you know, the ETF, defense ETF in the last 1 year, I think you can see that,
Right?
Uh,
I mean, they've made like 50%,
yeah,
right?
absolutely.
So, I
That's
mean,
a lot. Yeah.
does it mean, the profitability of these firms has increased 1.5x ad infinitum? No,
Right.
right? So I would actually look to short this the moment the clouds of war begin to scatter.
Right. Yeah. Right. So do you see any potential for global economic slowdown?
Because of the war, no, or anything else. Well, again,
Yeah,
if there is crude disruption, that could become a reality. But
right.
then the solution also becomes you know so much more urgent,
Right.
right?
Right. Right.
Unlike now,
Yeah.
where Uncle Sam can afford to talk about peace and do nothing about it. But
Right. Right.
if crude were to choke the global economy, then Uncle Sam and his uncle and his nephew all gonna have to do something about peace.
Right. Oh, we did see sanctions earlier as well on Russian crude, right? We did see that, and then I was the impact was not so high. Um, we might see it for Iran, and maybe the impact might be
No,
there, but
again,
I
no,
don't see it like big deal.
sanction is again inflationary. I'm saying, if war is disrupting your logistics, your oil, your global commerce, right? You're actually gonna have to do something about peace. Not just sanctions around oil or another commodity or five other commodities, right?
Right.
Because unless the conflict stops, no amount of paperwork can fix problems. And let's
Right.
face it, sanction is paperwork, which can be gotten around.
Hmm.
Yeah.
Right. Okay, that's a good deal. I think for investors, I think you have covered it well. I think. Do you think U.S. Treasuries also an hedge for investors?
Not exactly, because that's not an inflation hedge.
Right.
I mean, and that's definitely. I mean, you're better off with gold. You're better off with Bitcoin, right? And Bitcoin is actually turning out to be a very interesting hedge,
Yeah,
right?
it crossed 67,000.
Right. So
It's
chances
reacting
are
well.
it's behaving like digital gold with a low vaporization point.
Yeah, that's true.
So
Yeah.
so if
Okay.
it were to be less volatile, you know, it would have been 10x the market cap it is.
Right.
Yep.
Yeah. So how about for the business persons and professionals?
Right. Business people, they can, buy puts and, just treat it as
Hmm.
insurance, treat it as a cost,
Yeah.
right? Professionals, same thing. I mean,
Yeah.
if your business or job is at risk from this situation, not
Yeah.
otherwise,
Right.
right? I mean,
Yeah.
not applicable to every professional and every business person.
Yeah.
Yep.
Yeah. See, another thing, the two things. I mean, businesses depending on the global trade, right? Oil and all that. There will be
Sure.
supply chain. They have to think about supply chain diversification, and
Yeah. I mean, again, those are longer term things,
yeah, that's true.
right?
And
Uh,
of course, another thing, important thing is the currency hedging, right? Because they
sure.
will be. This is more suitable for international, global traders, global businesses, right?
Right.
So,
So, I mean, people who export and import a lot of stuff,
right,
better hedge the currency risk as well as the supply chain risk,
absolutely. That's true.
right? But
Yeah,
I mean, currency risk is something you can do in the markets, but
right.
supply chain risk is something you're going to have to diversify and you're
That's
going to
true.
have to work with in the physical world. So,
Yeah,
where
yeah,
we guys don't have a lot of expertise. So,
that's true. Yeah, that's true. Absolutely. Currency hedging is much easier than handling the supply chain diversification. Right. Yeah, but they have to have some kind of a strategy here.
yeah, again, you can do China plus one, China plus 10, whatever. Uh, but again, I'm not the best guy to talk about that.
Right. Another big event coming up, American elections.
Yep.
Right. So what do you think? I mean, we could only just speculate about it, of course, as at this point in time.
Right.
Um, so yeah, I mean, it will affect to some extent.
No, I don't. I mean,
Uh,
personally, I don't think it's a market event.
right. It's
Right.
not a market event. Yeah.
Not this time.
Yeah.
So
Yeah. It's more to do with foreign policies, energy, inflation, economy. Well, yeah.
right.
So
So one
yeah,
one one way to play that could be, what are the pet sectors of Donald versus what are the pet sectors of Kamala. So
yeah.
I mean that could be a way to play that. But that's pretty much about it. Right. I
Hmm.
mean, I do not see this influencing the wider market one way or the other.
Yeah, yeah, yeah. Yeah, of course, there will be an impact in the market sentiments depending on, who is in the lead. Uh, anyway,
Well, even
so
that I don't see that. I mean, it's been seesawing, right?
yeah, yeah.
But I don't see
The
the markets reacting that much to the
markets have, I
seesaw.
think, already built that in. Looks like.
No, I mean I don't think the markets are playing for one candidate vis-a-vis the other this time at least.
Right. Yeah. Okay. Alrighty. So now, I mean, is Bitcoin proving a viable inflation hedge? I think we did touch about it. I think
I mean, based on the limited data, yes,
yes.
right? However, we're gonna have to see.
Yeah.
Again, if this whatever is going on affects global inflation materially, right?
Right. Right.
How Bitcoin's gonna behave, right? Because
That's
I
true.
think I think so far it's proven a good hedge against inflation expectation,
Right. Yeah.
right? But is it a good hedge against actual inflation? Yeah,
Yeah. We'll have to see whether it's coincidental or correlated. So let's see.
exactly. Right.
Right. Let's
But
put it that way.
the data so far is pointing
Hmm.
to the possibility that it's doing a decent job as an inflation hedge.
Right. Yeah. So
Yeah,
yeah, because yeah, looking at times and maybe more leaning towards the correlation theory.
right. Okay.
Okay. Okay.
All
So
right.
final
Anything
thoughts.
else
Let's
to
let's.
discuss?
I think we have pretty much covered. So just let's wrap this session as of now. Let's
Okay.
see
Brilliant.
what's in store for us in the next couple of months. So wait and see. Okay. Thank you
All
for
righty.
um, watching our channel. Please feel free to subscribe, comment, share, and have a good day. Good night. Bye.
Bye-bye.